Alexandra, wanted to ask you a question. You follow closely these firms that have a Tesla position. You pretty consistently have been publishing this. Most recently, you said that Ross Gerber increased his Tesla position. There was no inflow, so it was just his decision to buy. And he raised, Gerber Kawasaki bought from 410 shares. They now own 550 shares. And I'm sure, please tell me if I got those numbers wrong or not, but that's...
You're right. It does sound ridiculous because, I mean, his ETF is really small. But what it is, I mean, first, and you were actually the right person to comment on that, it is pure window dressing. He doesn't want to be so underweight in Tesla now that the stock has run up. I mean, I can't believe... I actually hate that I talk about him, but I can't believe the pain he gave us in the worst moments, right? I mean, he was parading on TV and on any show that was available, cursing Tesla and being negative about it. And now he has to buy at $400 the share to at least get up to something that doesn't look too underweight for his end of year statistics. I mean, this is just, the irony is incredible. Now, again, why do we even talk about Ross? Well, the way his firm is set up is he has about $2 billion under management of clients who have accounts with him. And so these accounts have different ways of doing. Some people just let him do whatever he wants. Other people just have the money there for the oversight, but they decide on every single deal. For none of those $2 billion investments does he have voting power. So that's why he always had very, very little voting power. He just has his ETF's voting power and maybe his own shares, but none of the 2 billion. But what he does have is obviously quite a rich client portfolio, and that's what he parades with. So remember when we had those weeks prior to the June vote, and he was parading saying he was going to vote no. Well, all he could vote no with was his 400 shares, right? This was 3 times nothing. But anyway, so it is important that he is window dressing, just because even though it's a tiny fund, but there is all this other money, it is indicative of so many other fund managers. There are many, many, many fund managers who will window dress for the end of the year. Now, in an ETF, it's actually stupid because they're publishing their portfolio every day anyway, but I mean, be it. But in mutual funds who only publish their portfolios at the end of each quarter, it's really important to pretend that you were in the stock. Nobody will ever know whether you were in the stock on the 1st of October or whether you bought it in the last week of December. It's just ridiculous, but at least you don't look as bad. Now, you also have to know we're in the 4th quarter, which is the end quarter of the financial year, and for which all these fund managers will receive their bonuses compared to their benchmarks and compared to their peers. So they certainly don't want to look too stupid at this moment. So I still expect a lot of window dressing from bigger funds, because there are still so many who are underweight. Now, the thing is with the mutual funds, we don't know. We know they were underweight end of September, but we just think they don't want to be underweight anymore end of December. But I expect there is much more buying still happening.
Can you give us an update on ARK Invest?
So ARK Invest are ETFs, so they are publishing every day. I was actually expecting, since we had the run end of last week, beginning of this week, that they would start trimming again, because they're obviously in the high 15% again. Let me explain the situation for ARK Invest. They have a deal with their clients, 40 to 50% of their clients are institutions. I hear that it's a lot of churches and very conservative money. And so with these investors, they have a deal that no stock, it's not just particularly Tesla, should be allowed to be bought once it has reached 10% of the portfolio. So once it is at 10%, they can let it run for a couple of days, weeks, short months, but usually around 13, 14, 15%, they start trimming it. Now, obviously, if a stock overperforms, and if there is one stock that has overperformed in the last couple of days and short weeks, it was obviously Tesla. It runs up this percentage. That's just the pure calculations. And so it has run up. She has she has trimmed consistently at the end of November, second half of November, but she has not trimmed yet. So I'm waiting for the 5 o'clock email today where they announce what they're doing, but I would not be surprised that they're starting trimming again, because they're really at the highest level they have been since I follow them.
Alexander, can you explain something? It's just so weird to me. If they hit the target that they've been saying, right? Tesla's going to hit the $2,000 per share, $5,000 share. They'll sell all Tesla because they can't hold even like 100 shares. I don't get it. What's the point? If that's the case, what's the friggin' point of being one of these firms that are going for these disruptive innovations? Isn't that the whole friggin' point?
That's why Ron Barron solved it completely differently, right? Ron Barron had these limits as well, and then thought this is just ridiculous because the best running stock, we have to shave, trim all the time is when they run up. And he saw that very early. So what he did is he wrote to all the investors in his funds and said, we need a vote if you want us to be allowed to be, to run up with the stock price, please let us know. And so they voted on it, and I think it was close to unanimous, had voted that yes, please let it run, let our winners run. ARK never did that, and I think it is very much linked to their investor base. I think these are investors who do their traditional investments themselves, but then give to funds like ARK Invest or others smaller parts of their portfolio, but with very strict rules. They feel that these people shouldn't run with it, and that's when you're. I don't want to say that's when you're in bed with the church or with the devil. I don't want to go there.
Yes.
But when you are catering to a certain clientele, that's where it gets complicated, because obviously they bring you the money that makes you your management fees. I mean, ARK is earning money not because those funds overperform or Tesla is at 30%, but because every day the management fee is produced by these funds, and they want their clients to stay in there for as long as they can.
And then can you give an update on the shorts? What's happening?
Well, so on the shorts, we had the last update end of September. So end of September, they were short, but already uncomfortable. So I have no idea where they are now. We will have those statistics middle of February. But I mean, some of them must be really in a bad situation. You remember the biggest short, Per Lindlander, if I remember right his name? Yes. He has 50% of his fund as a short position against Tesla end of September. So if he's still in there, I mean, this is close to kaput. There is no way, you can only go so far. And I mean, he bought puts, right? So fair enough, these puts can at one moment that was it, they expire. But the money that he put in to purchase these puts is gone, and he has to value it every day at then current price. So he's feeling the pain every single day.
Do you know about Bill Gates, or is he hidden between all these different?
Thank you for giving me the occasion to talk about that, because I get a lot of questions about that. So when it originally became public that Bill Gates had a short position, I was really spending a day trying to find that, because on institutional shorts you can find information, and so I thought he may have gone over his foundation to do it, or I really tried to do it. For a long time I had no information, but thought it was the SESA capital. Remember, we had for a couple of quarters that SESA was the biggest short, and they had this structure with Cayman Island and New York and whatever. I mean, it was a nicely put in place situation. We knew there were about 10, 15 big, I don't want to say corporations, because big investors behind it. So it could have been institutional money, but it could have also been a person like Bill Gates that held the SESA money together. But SESA closed their short position in the third quarter. So we know they still had a huge short position at the end of the second quarter, but at the end of the third quarter, they had nothing anymore. So I still think that was the closest I could get to, is that Bill Gates money, but I have no confirmation whatsoever. And I tried really from multiple sources to find how he does his shorts, because obviously there's nothing that says Bill Gates is short of so and so many. That doesn't exist. Again, my biggest guess was SESA, but that would have meant he cut it. But again, I have no idea whether that is really whether I was on the right path or not.
Yeah, it makes most likely sense. And then Elon just, what is it, yesterday said that if Bill Gates is still holding this, he's going to lose everything. But and isn't he like
Yeah.
the third most richest man on earth?
Well,
So.
yeah, exactly. I mean, I think he went short at 150, wasn't it? Anyway, I can look that up. I had that in my old calculations, but it wasn't, as if it was. So this costs real money if he's still short.
Alexandra, if I can chime in, I looked, I dove down that rabbit hole on a Saturday afternoon because I don't know, I like to go down these rabbit holes.
I know the feeling.
But yeah, right. And I agree. I couldn't find, I was looking for all the institutions that he's implicated in, and it's complicated. It's a shell game, and there's so many corporations, and even his charities are funding other organizations that claim they're not for. Anyways, it gets complicated. You've gone down that rabbit hole. I agree, I concur. I could not find where it was that he had a short position, but it would be interesting.
The sheer size of it eliminated many of them. That's why in the end I got to this, best guess being CESA. But again, and they're politically very close, right? CESA has always been one of the big Democrat donors, Bill Gates as well.
Yeah.
So I had a couple of pointers, but too little for me to be affirmative on this.
Yeah, you're probably accurate. I'd put it like 75, 80% accurate. The work you're doing on this is incredible, and I appreciate it.
Oh, I'm such a noisy bitch, I know.
Oh, Jesus. Oh, no.
No, it's great.
That's
but
what
I
Herbert usually calls me.
Oh, yeah, that's right. Jeez.
No, I wanted to comment on the ownership of different funds. So I had a meeting with Fidelity actually yesterday, and I actually wasn't aware of this, and there's so many regulations as you work in the industry that you just didn't know, or maybe you forgot when you were studying all your courses. But as a mutual fund, you cannot own, if you're a regulated mutual fund, you can't own more than 10%. So all mutual funds have to
and the sum of your 5 to 10% can only be 40%. So you can't even have 10 times 10%. That's not how it works. The sum of all positions between 5 and 10% can only amount to 40%. So you have to be highly diversified as a mutual fund.
Yeah, exactly. And so as a result, so we're having this sort of come to Jesus moment where we haven't sold, and we're smaller even compared to Ross Gerber. We manage it within Wellington. The assets I'm responsible for with my team is about $1 billion, and we're approaching, depending on which strategy we have, clients are owning between 15 and we're approaching 20%. Now we're only allowed to buy based on the IPS, investment policy statement, that we've set up ahead of time with clients. We're only allowed to bring that position to 10%, but we don't have to sell immediately if it goes up. So over the last 3 years, we've tried to accumulate a position starting at 2% back in late 2021 and continue adding. And we eventually got to 10%. And then we just said, okay, that's great. And we said, well, our goal is, as this rises to 15, we'll trim and allocate to other areas in the portfolio, and that will create alpha over the market. Because that's really what clients want. They want a higher return over the market. But it's crossroads. And I'm starting to hear from clients, and my personal view is maybe clients don't want to, take the tax liability of selling, and B, maybe they're comfortable owning this and they don't force to. So we're actually looking to reach out to clients and say, listen, we're going to rebalance based on, bring it down. We need to trim. We don't need to bring down to 10%, but we'll need to keep it probably to 15 or so. But if clients don't agree with that and they want to continue holding, we're actually looking at allowing that to run outside of our model. Because we think it's the right thing to do. I've never sold any of my shares, and I don't plan on. And if there's clients that want to do that, I don't think we should force them to. Now, of course, we all know I got the idea from
Ron Barron.
And totally. It was just like it was in the back of my head, and it was a thought, and then this sort of we're all of a sudden in this situation. It's a great situation to have, and you're going, wait a minute, do we really need to force everybody to? But yeah, in terms of risk management, there's when you set up an investment policy statement, and you state that you will only have, buy up to 10% in any position, that's pretty much industry standards, right? So I always say,
Yeah,
like, don't criticize ARK, for example. They're running ETF. They're forced to over 10%. I don't know how much they can let it run. Stock Talk, you have something to say?
no, I just wanted to just comment on the point you're making. I agree with all of it, and I think there's a couple reasons for why this is happening. I mean, Ron Barron, I think people who are exposed to the institutional world who like to invest and trade growth stocks like I do. I mean, for the vast majority of cases, I trade technology companies only and invest in them only. But for people who are in that kind of space, Ron Barron is a legend because he had a great quote, I don't know, many, many years ago, like when I first started trading, and I'm going to paraphrasing here because I don't remember the exact quote, but he said, the reason Wall Street misses the best performing stocks is because they're obsessed with their 1 year return and not as obsessed with their 10-year return. And that, I think, is just a brilliant way to put it. And it's a fundamental description of the problem with most of Wall Street, which is that they're all vying for year-to-date performance, and it's part of the reason why market mechanics work the way they do, and people have chased these last two rallies. And so that's why Ron Barron has been able to capture incredible returns on investments like Tesla and SpaceX, because he's willing to be more focused on the 10, 20, 30-year return than he is on the 1, 2, or 3-year return. And I think that that's actually destined, what you said you're doing with your fund and what more and more funds are doing now, who are kind of shrugging off, or at least getting their shareholders and their investors to shrug off balancing requirements and diversification requirements, which have, I think, frankly, been a plague to the performance of most of the street. The reason more people are doing that is because you have to think about what's happened to trading and investing in the last just 10 years, right? The democratization of access to stocks has been a global phenomenon that's really relatively new, right? I mean, Robinhood is like a really common example now, but then you have a million different apps. Think about how much harder it was for an everyday person with $100 to buy a stock in the global financial crisis or the dot-com bubble. It was a multi-step process for most people, let alone most Americans, who we've been ahead of the curve on the financial ecosystem and market ecosystem. We've been a generation ahead of the rest of the world for most of the existence of markets. But even recently now there are globally, in the United Kingdom, in Canada, in parts of Africa, and parts of Asia, you could download an app on your phone, deposit some money, and buy a stock. That was impossible for 60-70% of the retail world just 15-20 years ago. So that, I think, alone is what's changing both the attitude towards diversification. I also think it's changing the attitude towards speculation. I think it's why you see more V-shaped recoveries in markets and in corrections. I think it's why stocks can hold these multi-trillion-dollar valuations, whether the balance sheet dictates so or not. I think it's all a lot because of the democratization of access to equities, and the increased willingness of people with less capital and less rules, the dreamers, if you will, the regular everyday people who are willing to think about a business as opposed to what multiple it trades at or what's on the balance sheet. So anyway, yeah, rant over. Go for it, Xander.
I was just going to ask if Alexander could update us on the thinking behind S&P upgrade of the category. Has that changed for you at all, or are we still going to be? Are they going to be waiting for the earnings to actually show that that they're making money in that
Just
category?
that we understand each other. We're not talking about the ratings. Nobody cares about those ratings anymore. Tesla gets AAA conditions when they go to the market, be it for asset-backed structured or be it for credits or whatever. So nobody cares about those anymore. If at one point S&P and Moody's now finally get us to higher investment grade, well, be it, but it doesn't matter, right? So let's not wait for that. Let's not fight for that. I do my quarterly table because I think it's interesting to do it, but it's not at all in the mood to shame them into something, because it's just they're lost. They're the old world, and I hope they're just gonna die there their miserable existence. You're talking about the category change from consumer discretionary to the whole tech segment. So at the moment, Tesla is there with the GMs and Fords and Amazons and I don't know what else in the consumer discretionary, because all car makers are there. And at the moment, we're still making, well, 90%, soon it's going to be much less, but 90% of our revenues in the car segment. So I don't think, because believe me, none of these people want to help us. Okay, so let's just make sure. So nobody's going to run out from their side and say, "Oh, wonderful, let's change them." Why is it so important? It is so important because in my calculation, it will trigger about $300 billion. And those were calculations when the stock price were 250. So I have to adjust those of purchases of Tesla, just because so many more ETFs are replicating the tech sector than the consumer discretionary, right? So while we are, of course, in S&P funds and all that, Tesla is currently not in typical tech funds because those are limited to what is in their sector and not us. So to bring it back to where we are, there is a committee. It's S&P, and I don't remember which other thing. I have a whole write-up on one of my posts on X who is deciding that. These people, this committee can be called at demand, meaning we, or better even institutions, would contact them and tell them, look, you have to revise the Tesla bucket. You have to get Tesla out of the consumer discretionary into the tech bucket. That may move something. At the moment, their reaction would be no, 90% car revenue, it's still a consumer discretionary. When the revenue will shift, and it will come from energy, we're already 10% energy, but it will obviously even more come from software as a service. When that happens, they cannot avoid it anymore. So my best guess is that will happen in 2026, and it will be at least as big as the S&P inclusion, because there will be so many ETFs that are in the tech segment, and Tesla will already be so big that they have to purchase such a huge share at that very moment.
SpaceX tender offer has been completed officially, so congrats to any SpaceX shareholders. But they are now officially worth $350 billion. That was obviously reported by Bloomberg last month that they were intending to do this. But SpaceX investors have agreed to purchase $1.25 billion in stock at $185 per share in a transaction valuing SpaceX at $352.3 billion.
Existing shareholders able to do secondary sale? Did Elon sell some to shore up?
I don't know the source of this, but there are internal investors that have purchased the shares either way. So if this was a liquidity event, it was an internal liquidity event where existing investors or potentially new investors bought shares from existing investors.
Yeah, I don't think Elon will need to sell Tesla shares, right? Ever. Now that you got SpaceX, and once he goes IPO with Starlink.
Percentage ownership on SpaceX? I don't know what the number is. I can ask ChatGPT maybe.
I think it was 47%.
Ask Grok. You don't ask ChatGPT, dude.
I think it's around 47%.
Grok's improving rapidly, but GPT is still a little bit better.
No, that's not true.
Hey, look, I'm an Elon fanboy, but I have to say,
that's not true. I've been testing both, and I'm okay. I have a different opinion than you, but that's fine.
That's fair. I use both too. I still use.
We search different things, so.
I won't say for analysis. I would say that ChatGPT kind of comes out on top a lot of the times, but for, say, real-time data analysis with stuff that's actually happening, I would say Grok is probably better. But like for more complicated, stable analysis, I'd say ChatGPT is definitely better. But maybe with Grok 3 that would change. But still, it's a very good product. Both are good.
I mean, they've improved. I mean, think about it. And the company was started this year, right? So they've done a hell of a job. For how much money and time they've put into it comparative to ChatGPT, they've done a hell of a job. Grok's a great product. It'll be a lot better in 3 months.
And they got all of the talent from OpenAI, So all the good stuff that's happened to OpenAI, that's going to happen to XAI as well, most likely. Probably even better this time, because I think that the kind of hardcore working culture there kind of incentivizes them to do the best that they can in ways that they've never really done before. hence why you see so much progress. All the mistakes I think that were even made by OpenAI and during the creation of what then eventually became the first iteration of ChatGPT, all that has been learned from, and I think is going to be applied to XAI in more ways than you can ever imagine. Which is also why
I'll be real. I mean, this might be a controversial opinion. I don't think Elon cares as much about LLMs as the other AI players in the space. Like, I think he likes Grok and he shares it and he shares the updates and stuff. I think Elon knows that the real money to be made here is in real world AI as opposed to LLMs. I mean, I've talked about this before, but like OpenAI, as valuable of a company as they are in the private markets, they don't make any money. They and they don't even not even make any money. I'm not even talking about just profitability standpoint. They only generate like $5 billion in revenue. Right? I mean, they're selling a subscription to glorified, LLM basically, and they're the market leading product, so they have a ton of subscribers and they have a ton of usage and whatever. But I mean, Elon sees that, and I think that the forecaster in him probably realizes, look, LLMs are largely going to become commoditized. Meta's already made an advance to do that, basically, right? Their Llama platform is free and open source, and so you're not going to be able to make hundreds of billions of dollars selling $20 subscriptions to an LLM, right? And I think Elon knows that. And the real money to be made here is in automating labor and, in things like autonomous vision systems, things that are going to dramatically revamp productivity. That's where the money's to be made, because those people who you can incentivize by saying, I will make you more money if you install my autonomous driving software, or I will make you more money if you replace half of your warehouse with Optimus robots. That's an incentive that people will pay top dollar for. That's the incentive that companies will pay top dollar for. And Elon knows that. And so that's why I think Tesla's focus is on real world AI. And Grok is sort of like, hey, look, it's good. It's a competitive LLM. It's one of the best in the market. But I don't think his focus is there. I think he's like, cool, here, you guys can subscribe to X Premium and get access to it and, find it useful and find it fun and et cetera, et cetera. But he's focused on the big prize, I think, which is real world AI.
I mean, look at something like Tesla Optimus, a perfect example of that. I'm pretty sure we've all seen this video where the little robot is walking around in actual nature. It even like slips there on one of the little hills, and the recovery looks incredibly human. That's remarkable, because if you look at something like Boston Dynamics, they have not been able to kind of do that yet. It looks very deterministic in that they have to like pre-plan everything. And with the case of Optimus, this looks very as if the system was improvisational as well. It's very cool to see this. That's the real world AI aspect. I think, it's a bit of a gateway drug with the LLM as well, but you definitely need a good assistant, which is exactly what Grok is for. Like, from a quality perspective, I think when you look at media creation, just for the productivity on that level, Grok is actually better because you have everything built into like one place. You're going to post on X.com, well, you can also analyze what's happening on X.com. You can use the system, you understand what's going on. Then on top of that, say, oh, I want to create a quick image of something that people know about. Okay, cool, it's going to be in their image generation model. Oh, hey, I just saw this meme and I don't quite understand it. Let me just download it real quick, put it up there, and ask, hey, can you tell me what this meme is about? Like, it's very practical for like day-to-day interaction.
It has a lot of synergy with X. Yeah, it has a lot of synergy with X. So I agree with that.
Yeah, it's going to make the bots and the cars that much brilliant, brilliant sentient beings at one point. Did you guys see this All In podcast? And they pointed out that Elon was actually critical in figuring out a way to solve how to get 100,000 GPUs to be integrated together. Apparently, other the developers from Meta and Microsoft, they could not solve this problem. They were stuck at the 30,000, but he was the one that solved that. It's unbelievable that he was able to go in and do this. Did you guys see that? Anyways,
yeah, I saw that post on timeline.
Yeah.
All the accelerationists were wildly amplifying it.
Yeah. Well, the reason why that matters is that the XAI supercomputer is actually also being used for FSD, and that was the big. I have not verified that, but that's the potential that could be what's happening, because an article was talking about that. When XAI raised money, that was one of the statements that they put in that statement. Okay, I think we're going to shut it down today. I'm going to go for dinner. Appreciate you guys. We'll do this every week.
Wait.
One
Tell
more.
people where you're going on vacation all by yourself.
Damn it. I'm going on vacation on December 22nd for a week. And yeah, I'm going to Maui. So I'm not going with my several friends. I'm going with
I
my
can't
family.
believe this. After years of promising us to take us,
It will happen. I'm out there to check it out first. You know.
Cry now until you're back.
Yeah. Sorry. We'll do it. Well, we will definitely do it. We're going to invite everybody that's on the space. We'll come. We'll go. Big party.
That's a good idea. Okay, well, enjoy your vacation, but
Yeah.
we'll obviously have a couple of sessions before that.
Yeah, see you guys. Bye-bye.
Love you guys. Bye.
Yep. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.